Hi, this is Ian Coleman from PIA-First. This is the video analysis for the week 11th of June 2018. Firstly, we're going to discuss briefly what we have out this week, what's on the docket. We've got Trump and King meeting on Tuesday. We've also got UK earnings, unemployment rate, and the dollar CPI on that day. Wednesday, we've got UK CPI, and then, of course, we've got the much anticipated FOMC meeting. And then on Thursday, Australian unemployment figures, the Eurozone harmonised consumer price index. And then on Thursday as well, we've got the ECB rate decision meeting. And also US retail sales coming out on Thursday. And then on Friday, we've got the Bank of Japan interest rate decision and the Euro CPI. So we've got a lot happening this week. We believe that trading is going to be pretty mixed and volatile. And medium-term analysis or trying to catch medium-term trades is going to be pretty difficult, but we've got a few set, and most of them offer quite decent risk-reward trades. So let's go to the charts and discuss what we're seeing at the moment. So as always, we're going to start with the dollar index, the weekly chart. We're going to break down through time frames, get a bias from the dollar index, and then go to the FXMajors to highlight basically what support and resistance levels we're seeing, what formations we're seeing, and also what we believe will be decent sort of long and short entry trades. So the dollar index weekly chart, here we can see that we had a rejection of gains inside the weekly Ishimoku cloud. We've then seen a down move in the dollar last week, and this free candle formation has made an evening doji star. Now that has a downward bias, but our long-term bias is still for higher levels in the dollar index. So there's scope for mild buying at the beginning of the week, but then we're looking for losses to extend, and then we're looking for buyers to return. And really this sort of 95, 70, 96, the figure area is still what we're going to target over the long term for the dollar index, but the scope for a deeper correction. And if we go to the daily chart, here we can see that we've had a Elliott wave formation to the upside, so that's a 5-wave bullish formation. So wave 1, 2, 3, 4, and then up in 5. We're now in what we believe the corrective formation lower. So although we've seen this strong sell-off, which has made that evening doji star pattern, we've got bespoke support located at 93.49, and that's being held onto at the moment. So there is scope for mild buying at the beginning of the week, and we believe it will be mild, maybe towards sort of 94 the figure. And if we look over here, sort of previous swing highs are sort of 94.25 area. So scope for mild buying, and then we're looking for sellers to return, and then we've got strong support located at 92.10, that's our bespoke support level, and then here 91.63, which is the 50% pullback level. If we push through there, we've got trendline support and the 61.8% pullback level at 90.83. So like I said, we're expecting maybe a small bounce at the beginning of the week, and then for this dollar sell-off to continue towards the end of August, and then maybe even into the beginning of September. If we reflect that bias onto euro dollar, let's go to this chart first, because I think this is probably the most important chart in this outlook. And this is the fact that we've had this AB CD formation complete around about 18.25, and then we've seen this move lower. Now if we go to the weekly chart, this move to the downside stalled and reversed close to the 261.8% extension level at 114.90. We posted a DMARC 13 count on the weekly chart, which is an exhaustion, and we've got the reverse now of what we're seeing in the dollar index. So this is a morning doji star formation. Bespoke resistance is located at 117.84. So again, scope for a mild sell-off this time in euro dollar, and then a move higher towards our bespoke resistance at 119.82. So although we've got this long-term bullish bias, there is scope for a mild dip at the beginning of the week, and then we look to take that dip higher towards 119.82. If we go and look at the weekly chart on a different aspect, we're potentially forming a bearish head and shoulders formation. So left shoulder, head. This is the neckline. So again, that's that morning doji star formation. A mild dip to the downside. We've got support coming in here at 116.70, and then we look for the next drive higher towards this area, which is basically 119.65, 120.35, to form the right shoulder before we get that drive lower. So that is a pretty good reflection, or reverse reflection, I should say, on what we're expecting in the dollar index. So dips to be bought, and then a sustained rally, and then obviously the rally to be sold into for the next move lower. Sterling dollar, the daily chart looks to have completed a bearish 5-wave pattern to the downside. We've then seen 3 days of indecision, but we've got our bespoke resistance located at 134.67, so we can see that we've held on to that level. Again, we're expecting dips to be bought, and we're expecting the correction higher to then make a move towards 136.40, 137.10. If we go to a 4-hour chart, this is what we're looking for really on the intraday outlook. So this again is that bullish move higher. Then we've got this 3 days of indecision, a dip down to this sort of level, which is 132.80, and an AB CD formation will then take us up here, which is again that medium term resistance level. So looking to buy dips over the long term in sterling dollar for the higher correction to the upside. Dollar Swiss, mixed volatile trading has continued. We had a 13 count here, DMARC. We've broken this wedge formation to the downside. Now we have held that reverse trendline support, which comes in at 98.21. We've also got bespoke support at 98, the figure. So we're still bullish in dollar Swiss. And if we look to this chart, we can see the pretty mixed volatile trading that we've seen in this currency. So 261.8% extension is located at 97.98. Dips have been bought there on Friday, but the rally has also been sold at our bespoke resistance. So we could see some prolonged volatile trading in dollar Swiss, but the bias is still to break to the upside out of this wedge formation. Some might say we shouldn't really be bullish on dollar Swiss if we're being bullish in euro dollar, but in fact we are bullish in euro Swiss, so that using correlation, that outlook still works or still fits. Dollar yen, we're short of dollar yen at the moment. Let's go to this chart first. This is a weekly chart. Here we've got a bearish outside candle. Although we've seen dips to the downside or a move to the downside being bought into, we've also seen the moves to the upside being sold into, and it's not until we go to this time frame, which is the 4-hour chart, that we can really see what's going on. We believe we're in a head and shoulders, bearish head and shoulders formation. So left shoulder, neckline, head, right shoulder, close to the 61.8% pullback level. We've got bespoke resistance at 109.74, and then we've got support at 109.02, and then here, which is really our focus this week, which is around about 108, the figure. It's this trend of lower lows, and it's also our bespoke support. So this is our main focus this week, with maybe intraday rallies being sold into at the beginning of the week. Dollar CAD really struggled with dollar CAD lately. We are in what we believe to be a descending wedge formation that has a bias to eventually break to the upside. We've had 3 months where we've seen spikes in all directions, which highlights indecision. If we go here, we can see on the weekly chart that rallies at this trend of lower highs is being sold into, and we've got bespoke support here at 128.31. So at the moment, we still believe that this bias is lower. We're holding on to a channel formation. We posted a bearish outside candle on Friday of last week, and the bias still remains bearish as we get this deeper dollar correction. We've got bespoke support at 128.12, and then we haven't got anything really until 123.83. So at the beginning of the week, we're going to be looking at selling into rallies, but really mixed volatile trading and a mixed view really on the on crude oil as well is making it hard to get decent risk reward trades in dollar CAD at the moment. Aussie dollar, I think the most important time frames here, which is the weekly time frame. Here we can see that we've had a ending wedge formation. We broke the formation to the downside. That rally up last week got sold into at the reverse trendline resistance, which was at 76.48. We've also closed below our bespoke resistance at 76.40. Obviously, we've got some decent Australian figures out on Thursday next week. We might see some consolidation before that, but our medium-term bias is still to the downside, and we're looking for levels down to here, which is 72 the figure. Euro sterling, another one that's pretty hard to analyze, if you like, at the moment. We're pretty flatlining on the monthly chart. We can see that the RSI is really relatively unchanged for the last 7 or 8 months. If we go to the intraday chart, we can see that an A-B-C-D formation was completed. We've now got support down here at 87.32, and we're looking to buy into dips. If we go to the daily chart, an A-B-C-D or larger A-B equals C-D formation, if we buy dips around about 86.70, offers a move towards 88.94, which would in turn form a bearish Gartley formation, and then we expect to move to the downside. At the moment, we've got support at 87.45, but that is monthly support, so it does mean that we could get a spike through there during the month before a rally higher to close up around this level. So at the moment, we are bullish medium term on euro sterling, looking to buy into dips. Euro yen, let's look at all the time frames here. Monthly, bearish outside month. The Marubozu level, which is the midpoint from the open and the close, did hold back a rally in April, but we have seen a move to the downside. We're now inside the Ishimoku cloud. Sometimes what happens is if we're inside the Ishimoku cloud on the monthly chart, we get mixed and volatile trading on the weekly chart. If we're inside it on the weekly chart, we get mixed and volatile trading on the daily chart. So we're seeing some pretty mixed formations and trading in this cross currency at the moment. The daily chart, we can see that was the impulse move to the downside, a move higher to the 50% level, and then we move lower, and then we've even broken this reverse trendline resistance. Our bespoke resistance is at 130.37 at the moment. If we go to this time frame, which is the weekly chart, again we can see that rallies up have been sold into. So our immediate bias, and even using correlation, we're expecting euro yen to continue a move to the downside, but if we go to the 30-minute chart, we can see that the last head and shoulders formation, so we take this length here, which is the head to the neckline, and we then project that from the breakout level, and that's our target, and that was at 128.20. So that has been completed, but this rally up has also been sold into. So we're looking to sell into rallies in euro yen this week. Okay, I hope that's been informative, and we'll speak to you again soon.